Welcome back, community, to another interview. Today we're with Tim Clark, CEO of VRIC Gold. Tim, can you give us, in your own words, an overview of what you're working on and a context to the company as well?
Sure. Well, the company is a Canadian-based junior exploration company. The focus right now has been, the last few years, has been drilling in Quebec, where we own two properties. One is called the Eau Claire resource, and the other is called the Eleanor South, which was previously a joint venture with Newmont. And then we also own a big greenstone belt property called Committee Bay up in Nunavut. It's a 300-kilometer greenstone belt. It's up near Agnico's Meadowbank, to give you some reference. And then we also own a big piece of a company called Dolly Varden, which has enabled us to finance ourselves and be, I think, a better sort of play for investors from a financial point of view.
Yeah. Before we go into finance specifics, can we talk about your exploration highlights in 2024 and what stage that's set for your strategy in 2025?
Well, we started the year by acquiring the second half of the joint venture from Newmont in the Eleanor South region, and that was a big plus because it allowed us to do some drilling up on that property that previously hadn't been done. So originally 3 companies owned it, Azimuth, Newmont, and Fury, and it's kind of like, owning a boat with your friends. Nothing ever gets done.
No timeshare.
Yeah. So there was nothing done on that property for a decade, and so we started getting after it up there. We went up near a company called Sirius, is across the border, and we were testing our property around
Dominique,
us.
Yes.
And we like what's up there, but our focus has really been back on this anomaly that's down just below the Eleanor mine. And the Eleanor mine being sold to a new company, private equity company, they have capacity or need for more ounces. And so the idea is if we could discover some big discovery there, would be great for all of us. And so that's been our focus, and we're starting to drill as of next week there. But the other part of the drilling last summer really for us was focused back at Eau Claire, and that was really to firm up some of our targets that we had on the property. We not only have 1.9 million ounces there, but we have 16 other targets across the property. Effectively what we own is a 30-kilometer section of the Canard Deformation Zone, which is highly prominent for gold. And so we haven't really looked at that property previously, but we've been trying to build our pipeline there. Right. So when we sit down with companies and look at that property, they're like, these are big producers and they want big mines, and there's not a lot of them. But what they're starting to get at is, hey, we like what you have. You almost have 2 million ounces here, but if you found like a string of pearls or other discoveries that we could feed that, now we're starting to get interested. So effectively, we've been signing more CAs in the last 6 months than we have in the previous 3 years.
So you're moving through that strategy of finding that, quote, string of pearls.
Right.
Okay. Well, let's talk about financial strength. So you've got a potentially good material. So what does it look like? I know you said Dolly Varden is about 51 million shares, if I'm not wrong?
Yes, pretty about that. That's about right. So we own just over 50 million shares of the company. Originally, when we sold Homestake Ridge to them, we took a third of the company, and we've whittled it down, and they've diluted us a bit. So we own about a little 16-17% of the company. We're the largest shareholders. And we've used some of that money to purchase like the joint venture and finance some of our SG&A to keep the dilution down. But effectively, I don't think there's too many junior companies that own such a big slug of another junior company. And this is a good one because it's one of the top 5 takeout targets in silver. And so what's been fabulous is we've taken $20 million off the top, but our investment has grown so much that we actually still have more than when we started. Mm-hmm. So it gives us a big bargaining chip. Like when you go out to finance with the brokers and people are looking for discounts, people are looking for warrants, what we're able to do is pick and choose the time that we want to because we're not desperate and we have money, we have access to capital. And I think most people forget how important that is, and you can get in trouble if you don't have financing. That's when you see these big sort of decreases in the stock. And that's why I think our stock has actually held up pretty well. Mm-hmm. And that kind of money can be transformational for a company like ours. and we're trying to figure out the best way to do it.
The gap between gold spot price and the performance of juniors and producers alike has been a major topic on our show, but just within the industry itself. What do you think makes Fury Gold positioned to, be changing that tide if time comes?
Well, I started my career in finance. I was basically on a sales and trading desk for almost 25 years. I raised a lot of money for these big companies and junior companies. And so I've seen the trends go up and down. And look, it's a missed industry right now. Even the large caps have further to go. They should be trading at a higher valuation considering, what the gold price is. So for example, I came in at 92 cents. Gold's been up $1,000 and my company has incrementally improved both in our financing, new assets, new discoveries, new resources, and we're trading at 53 cents. So there's a huge gap in terms of what the investors are looking at. And I think the problem really is there's been a lot of distractions in the world like AI and other types of investments, Bitcoin. But this is an industry where supply and demand is going to catch up eventually. As much as you want to ignore it, it's going to catch up. And when you look at Fury in particular, we have an $80 million market cap, and I've got 50 million in someone else's stock, and I've got real resources that have real actual will be built. And when you look at the cash flow analysis, net present values, there's a huge gap. And so if you're an investor just looking at a play in the juniors, why wouldn't you? We should be one of the top 5 picks, absolutely across the board. So when I went out to Fidelity, when I went out to Wellington and other accounts and all these investors across the world and Agnico, they pay attention, but we're small. And because of that size and whatnot, it takes a little time and the retail needs to catch up. And when the retail catches up, we'll get legs and institutionals will come into us. That's my view.
Fury is on the Venture Exchange. Is there...
We're also New York Stock Exchange, which is a big one because 2/3 of our money or our investors are in the US. And for the Canadians, it's a huge advantage for us because that's where most of the money is in investing. It's 10-1. And so for us, if we get any kind of good news, all the retail guys are going to clamor because there's just so few choices for junior golds in the United States.
Well, that leads perfectly into my next question, which is where are your investors geographically based? Where are you getting interest? And especially as we move into the year past January, what kind of meetings are you having? Who are you talking to?
So the bulk of the money is in the US, but a lot of its interest is in Europe too. And Canada certainly plays a part, but the movers of the bigger amounts of cash flow really is coming out of those 2 regions. So I spent actually last fall traveling through 4 or 5 countries in Europe. The appetite, like in Switzerland and Germany, is fabulous. And I've been down to Belgium, Holland, all throughout Switzerland, and there's huge money that's interested. Europeans are first to move over the US, North America. A lot of the gold price has been driven by Asia and the countries that work with them. But as the prices go up, eventually Americans are going to catch up. And I feel like at this conference, it hasn't been negative. It's been very positive. Most of the questions are, what do you got next? What's coming next? They're doing their homework, ready to invest. And I think when I got out of a meeting about an hour ago, what they're talking about is some of these juniors that have had discoveries are not up 10 or 20%, they're up 100, 300%, like recently. So that tells you that there's a healthy buying market out there for these junior stocks. And like I said, we're about to take a big swing up at Eleanor South, and we should have these results coming out around PDAC. So
it's a good timing, right?
Yeah,
to
good
listen
timing.
To the story.
Yeah.
Before you go, one last point I want to make is what I hear is financial strength. What I hear is a great potential project here in the region in Quebec. What's one more thing you'd like to say or describe the company as?
Well, I think I would go back to, we're trying to run this company with integrity, and we're trying to treat our partners right and emulate some of the companies that I think have been really successful in my career. And it really starts with leadership, it starts with culture, and you make good decisions and you get the best out of the people that work with you. So we have a lot of people who want to come work at Fury, and we've retained everybody that I've really been started with. And so we want to continue on that trend, and a lot of it's about being transparent with your investors. And if you over promote and disappoint, that's what kills your stock. But if you tell your investors you're here for the long term, you've got your own money on the table, and you're being honest with them, I think that's going to go a long way in what the junior market needs.
I genuinely look forward to sharing this interview with our subscribers and our community. So thank you for being here.
Thank you very much.
You can find Fury on CEO.CA. We've got a dedicated channel for Fury under FURY. Thanks for watching.